This is ShadowQuant, Market Brief, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Friday, June 26, 2026, and this is the After Hours session. Now, let's get into it. The S&P 500 and Nasdaq closed modestly higher, defying an extreme fear sentiment index of 14 out of 100, while geopolitical de-escalation in the Middle East failed to spark a broad risk-on rally. With the dollar mixed but stronger for the week and inflation still lingering above target, the market is signaling caution, not celebration. Here is your ShadowQuant after-close wrap for Friday, June 26, 2026.
Equities closed with a shrug. The S&P 500 tracked by SPY settled at $73.30, up 14 basis points. The Nasdaq 100 tracked by QQQ led with a gain of 0.81%, closing at $716.38. The Dow Jones tracked by Diamonds matched the S&P at 0.14%, finishing at $519.26. Small caps tracked by the Russell 2000 ETF IWM outperformed, gaining 0.75% to $298.91.
A narrow leadership spread with industrials leading and discretionary lagging. Let's see if corporate results backed up that move.
Earnings volume was thin, but the headline story was Core Scientific, which turned lower after its fourth quarter results disappointed. The stock dropped as Bitcoin made its first sub-$60,000 close since the third quarter of 2024, triggering a broader reassessment in the crypto sector. 21 Shares trimmed its 2026 crypto forecasts despite noting institutional adoption gains.
Crypto weakness and thin earnings volume. Let's look at the macro backdrop that's keeping the dollar mixed. Macro data remains sticky. The latest consumer price index, year over year, sits at 4.17%, well above the Federal Reserve's 2% target, maintaining hawkish pressure on the central bank. Core personal consumption expenditures, the Fed's preferred inflation gauge, is at 3.41%. Sticky inflation and a strengthening dollar. Spectre, is there any elevated risk on the horizon?
The primary risk signal here is the disconnect between price action and sentiment. The crypto fear and greed index is at 14, indicating extreme fear, yet equities are green. This divergence often precedes a correction if the sentiment does not snap back. Additionally, crude oil settled at $69.23, down as geopolitical tensions ease, removing the war premium. If the trilateral agreement in the Middle East holds, energy stocks like the energy sector may continue to underperform as risk flows rotate back into growth. No sudden credit warnings or rating downgrades were flagged today.
A divergence between fear and price and a cooling energy premium. Apex, what are we watching next?
3 key items for the week ahead. First, monitor the euro-dollar pair. The greenback is mixed but higher for the week. If euro-dollar breaks below key support, it could signal further dollar strength heading into next week's data. Second, watch the 10-year Treasury yield. At 4.40%, it's the key indicator for whether carry trades remain viable or if Japanese government bond yields force a reversal in dollar-yen. Third, watch gold. With CPI at 4.17% and the fear index at 14, gold is the ultimate hedge. If equities falter, flows will likely move here.
If you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. This is an AI-generated market briefing by ShadowQuant. All information is for educational and informational purposes only. It does not constitute financial advice. Always do your own research before making any investment decisions. That wraps up this edition of ShadowQuant Market Brief. Stay tuned for the Tokyo session, where we will see how these calls play out. Until then, trade safe.